Good afternoon, everyone. My name is Daniel Kim, CEO of Target Research. I'm really excited to be here, and special thanks to Hub 71 and Hash for organizing this wonderful event. Personally speaking, today we're going to talk about institutional custody solution right after Triple S's amazing performance. So hope it's going to be the most exciting session today. We have four leaders from Forefront on keeping the security and also the transparency of keeping our virtual assets and crypto safe. And we have leaders from Babylon, Hex Trust, and Defense. I would like to take some moment for each speaker and panelists to introduce themselves and learn about what they do.
Hello, everyone. My name is Fisher. I'm the CTO of Babylon Labs. Babylon is a Bitcoin project that builds native use cases for Bitcoin. What we would like offer to the Bitcoin holders is native, trustless, and self-custodial solutions for their Bitcoin to put their Bitcoin into work. So we are not custody ourselves, but we work very closely with custodies in bringing the most secure and awesome experience to Bitcoin holders.
Hi to everyone, Filippo Buzzi, Managing Director of Hex Trust MENA. We are a regulated custodian, broker-dealer, and virtual asset manager here in Dubai under the regulatory framework of ARA. Hex Trust is the leading Asian institutional digital asset custodian. We have offices in Hong Kong, Singapore, of course here in Dubai and in Milan, and I look forward to conversation.
Hello everyone, I'm Clarice, CEO and co-founder of Defense. We are a tech custody provider. I think we'll go over the difference between what is an actual custodian and a technology provider. We provide our service to financial institutions, banks, tokenization platform, trading platform. We've secured over 6 billion of volume and are generating about over 1 billion since September of volume through our platform. And we've generated more than 10 million wallets for our clients, including Fidelity International, Zodiac Custody, Tungsten, and others.
Thank you so much. I think we can first kick off with kind of discussing about with the recent market trends where a lot of people are excited about investing and building on blockchain, especially, and there's a high need for keeping and respecting the security and transparency, as well as actively working on the blockchain. So Fisher, I know you're one of the biggest staking platform for Bitcoin. Really excited. How is Babylon's protocol designed to meet specific needs of institutional clients in terms of security and transparency?
Yeah, sure. So just for context, Babylon builds Bitcoin staking. We are currently at the final stage of our phase 1 mainnet. As we are speaking, we have over $3 billion worth of Bitcoin staked in our platform. And I think part of the reason why we can achieve this very impressive number is the transparency and the self-custodian concept behind our staking. Because especially for large institutes, they care about the security of their fund in front of anything else. So the more intermediate agents in the process, the higher the risk. So when we design our protocol, we aim at minimize all the intermediaries. Indeed, we eliminate this completely, making the staking completely trustless and self-custodial, so that the institutes can feel very comfortable with our protocol. There's no counterparty risks. Yeah.
I'm sure there's a lot of customers, both retail and institution. Can you share one of good examples that you feel very confident about working on your Babylon?
Examples of custodian partners.
Hex Trust?
Hex Trust.
Yeah.
Hex Trust.
Yeah.
Hex Trust, Anchorage, and Sifu. Yeah, to just name a few. Yeah, and
Okay.
Hobo. Yeah.
Thank you very much. So Filippo, on that, like Hex Trust, there's a lot of news and there's a lot of excitement around what you do, and especially you said they're building out very actively in Asia. What do you see as the characteristic of each jurisdiction, and what are the characteristics of like when you play?
Yeah, absolutely, yes. So since the very start of the company, it has been quite of a journey. We started our operations in Hong Kong, and we moved across different jurisdictions following mostly regulation. Since the very beginning, we wanted to create a bridge between digital asset finance and traditional finance in a regulated way. So at the very beginning, there was no regulation available in Hong Kong. Then we got our first trust company. Then we moved to Singapore. We opened an office there. It took a very long time, but recently we received our major payment institution license from the MAS. And then we saw the opportunity here in UAE, where there was the first established regulatory authority focused exclusively on virtual assets, VARA. So this is really, has been a challenging process, and there will be more. We're now registering in Europe for MiCA, and I expect a lot of complexity, but yes, this is in a nutshell the answer.
I mean, must be a lot of challenges when you work with all the jurisdictions and regulations and regulators, but see a lot of opportunities and optimism. But can you share some lessons that you have learned at your team?
Yeah, absolutely. From a regulatory perspective, different countries, different frameworks, different requirements, although there is more or less a certain standard. In terms of opportunities, the real opportunity I see here compared to other jurisdictions is that there is a lot of appetite of financial institutions to come into the space. And obviously, these institutions tend to come into the space through instruments that they know and they like, for example, ETFs. But I believe that going down the line, I think we will be more and more adoption on-chain, meaning we will be able to provide custody for physical Bitcoins. And for example, working with Fisher closely, we will be able to allow institutional to provide, we will provide custody, safe custody, and then they will get access to staking in a regulated way through a regulated virtual asset service provider.
Well, thanks very much for sharing. Clarisse, I know you're very active in Abu Dhabi and UAE. Congratulations on that. Defense is well known for its MPC-based security solutions. How does this technology address the specific security concerns of the clients?
So maybe I'll take a minute to take a step back, because I don't know what's your level of understanding of institutional custody in this audience, but you may have heard terms like self-custodial, wallets, non-custodial, and it gets very confusing, right? So first, there's a clear difference between the technology part of it, right, and the regulation. So Xtrust is a regulated custodian. We're a technology custody provider, meaning that what we will do is enable our clients to actually safekeep their assets. We're really a tool for players to enable them to not only secure their assets, but also transact their assets. Now, once you have said that, when you look at technology and at technology custody providers, there's different solutions you can use. You can use, you've heard probably the words MPC, smart wallets, you've heard the words HSMs. There's many technology behind the interface of the tech custody solutions you will use. And you need to choose the one that is actually useful for your business and also your status as a financial institution, right? Are you trying to be regulated? In which jurisdiction are you trying to be regulated? Because across the world, you have regulators that have set standards that vary in order to actually tell you and be able to issue a license for you, right? So, for instance, if you're based in Hong Kong and you want to get a license, you will need to have 95% cold storage, 5% hot storage. Another term, right? Cold, hot, what does that mean? This is just a level of temperature that actually tells you whether your custody solution, your technology, is online or offline. So once we've put a bit more clarity between all these terms, pretty much non-custodial, custodial, this is just a regulatory term. MPC, HSM, this is the technology you will use. Hot, cold, this is whether your technology will be online or not. Then you need to figure out your risk, right? So who are your clients? What are the risks you're facing? And depending on the risk you're facing, you'll choose the right technology for the right use case with the right interfaces. When we started, we decided to actually build our service on MPC technology for one very specific reason, which is that MPC technology is a cryptographic protocol that enables to remove the single point of failure during the whole life cycle of the key management. In other words, you generate your wallet, the key is not present in its entirety, you sign a transaction, the key is not present in its entirety. So there's not a single moment during the life cycle of the key, so of your assets, in which a hacker can come and hack and steal the key, right? So we thought that this technology was the most advanced in terms of security to be able to provide the comfort to institutions to actually manage digital assets at scale, online, with a lot of movement, with a lot of volume. So this is one of the reasons. Now, we could drill into MPC because there's many kinds of MPC, there are many kinds of difference around how it's implemented. Having said that, MPC has also, it's not just a holy grail, right? So you need to look into the details. It's not because you see that a provider is an MPC provider that it's checked the box that, oh, it's institutional grade, right? So looking at the processes, how it's implemented, what are the certifications around that, this is all very important. Now, we do believe that MPC is very useful and will still play a big role in helping institutions safekeep digital assets. But what we figured out as well over the years is that a lot of banks have been securing and managing private key for decades, right? Encryption keys have been a subject for banks for the past 50, 60 years. And what are they using? They're using HSMs, not MPC. HSM is a technology that is actually standardized by NIST. Like, you know exactly what you're getting when you're buying an HSM that is FIPS 2 certified, for instance. You don't know that with MPC. MPC is a technology that is not as young as people think, and it's still 30 years old, but it's not certified by the biggest security standards in the world. So our team is working with NIST to provide standards so we can help this technology go through the process and the audits of large institutions. But if you're a bank that has already audited an HSM setup, it's very, very probable that what you will do is actually using the key infrastructure that you already have on-prem. So we move from being an MPC-only provider to enabling our clients to interact with any key deployment service that they've already done, because at the end of the day, our mission is not to be opinionated about the technology, it's to provide the keys and the tools for our clients to, one, be compliant, two, get regulated, and three, build the use case they need to build.
Thank you very much for a thorough explanation of the history and the categorization. I'm sure a lot of our audiences was evangelized for what you're going to say. Kind of moving on to custodial solutions and practices in a relationship with regulations. You know, there's a lot of changing trends around how we trade and store assets, as well as evolving support, as well as some friction with the regulators. Fisher, if I ask the questions, what do you see the trending changes of retail and institutions regarding custodial solutions and protocols, and how do you see the space evolving with working with the regulators?
Yeah, sure. So the relation between the owner of the asset and custody is to some extent kind of tricky. Yeah, some people believe they are counterparties, but to me, I feel the custodies, they are actually the extensions of the actual asset holders, to help them to manage their asset in a much better way. But starting from there, if you enter the on-chain world, then you become like the Wild West. It's much more risky. So to me, like, custody is the best friend, for both for institutions. Previously, retailers cannot afford custodies, right? But now I think more and more it become more and more accessible, which is a very good trend.
If I may elaborate a bit on this topic, which is very interesting. By operating here in the region, by being regulated as a custodian, I do realize how custodians are the very last mile of the permission part of the business. So businesses come to us to keep their assets secure, to be able to interact with DeFi. And fine enough, obviously the regulator wants to regulate everything that is permissioned, and we are very much permissioned as we are a centralized custodian. But when it comes to DeFi, it becomes very, very complex to regulate. So as a custodian, we have three duties, I believe, that are important: keeping assets safe, being the gatekeeper of compliance, but most importantly, from a technological perspective, we need to give access to the DeFi space. Because that BTC sitting there idle, do not go anywhere, and being able to interact with DeFi, we provide the yield that the institutional clients today want.
Thanks, Filippo and Fisher. Since you have the mic, can you add on a little bit more about then what do you see as the increasing trend or changing atmosphere around custody solutions when you operate in your region?
Changes and trends in the...
Yeah.
Yeah, absolutely.
Or any predictions that you think will happen?
Yeah. So, well, obviously, regulatory is a very important thing. To be regulated, you have to be centralized, and we are very much a centralized custodian. And then, obviously, technology is very important. We have talked about HSM, MPC. Actually, we can collaborate on different technologies in order to provide safe and secure solutions to clients. Interoperability and scalability is very important, extremely important. We need to be able to deal with different chains and a lot of transactions. Compliance, it is very much important, especially when you face institutions. It has to be automatic. It has to have connections on chain. You need to have auditable trails because regulators are really looking into it. This is actually one of the main focus points of regulators that are laser focused on AML, KYC, and CFT.
Thank you very much.
Thank you.
Karise, back to you. In the previous comments, we learned a lot about the history and the categorization of wallets, and I really loved how you said every customer or client has to adapt their own strategy for custodial, not just MPC, not just hot or cold, but when it comes to when you work with trading platforms, what's the relationship and how do you support them with maintaining security and also transparency?
Yeah. So there's several levels. First, when you work with a client that is regulated, you need to enable them to be compliant. So what it means is that you need to be a technology that is certified. You need to have processes that are certified. So on our side, it means being SOC 2 Type 2, audited by a Tier 1 institutions, having the ISO 27001 framework in place as well. Because when you're doing that, you're spinning up the due diligence of your clients. So they can click box pretty much and then send all that to their regulators. So that first part of auditability, which goes through, I would say, security and operational certifications framework. Second, having access to all the pen tests and audits, the code audits we do. So go one layer below, the technology is very important, right? And three, once you've enabled a client to actually do his due diligence, you need to enable them to be compliant by design. And what it means is that a tech custodian is not just a technology that is helping you checking box, it's also helping you implement the actual framework. For instance, if you need to provide Caesar capability, well, you need to have a technology that will enable you to seize a wallet. If you need to have segregated wallets because your regulator is asking you to segregate all the funds of your clients, then you need to have a solution that will enable you to perfectly segregate private keys from each single client, right? So there's a lot of features from a tech standpoint that then we need to implement in order to enable our clients to, both from operational auditability, but also technical point of view, be actually compliant and implement the framework they need. Now, from also a business standpoint, when you're talking and working with trading firms, and you just talked about operability, when you think of a wallet is not just a place where you safe keep your assets. It's also a place that enables you to transact from one venue to another. You always need your wallet to, for instance, trade in DeFi, to stake your assets. The wallet is really much a distribution service. And this is how we see ourselves. We need to be as open as possible and make all the integrations possible so our clients can build their businesses and actually start making money on top of us, right? So, for instance, we've also built an integration with Babylon, which was actually something that was quite hard to do in the beginning, right? Because you needed to support at the cryptographic level Taproot in order to enable staking with Babylon. So this is something that we've done in order to enable our clients to stake in a self-custodial way with our service. But then after the detail, I would say the devil is in the details, right? Because not all integrations are equal. And where you're working with a trading platform and with large financial institutions that are actually trading, you need also to enable them to make sure that they know what they sign. This industry is operating a lot on what we're calling raw signing, which pretty much have a consequence that everything you sign is blind, right? You don't know what you're signing, which can have consequences that are disastrous. Financial institutions cannot operate this way. Compliance officers need to be able to actually check that at a moment when you sign a transaction, the smart contract was decoded and you actually know what you signed. So there's a lot of details along the way when you're working with trading platforms, where from a technology standpoint, what we need to do is enable in a secure way all the bridges so our clients can build business and profitable business on top of it.
Thank you very much. Well, given that we have 5 minutes left, I'd like to offer panelists for the last comments and remarks for the audience gathered here, probably people from enterprises, institutions, banks, as well as retail who are interested and thinking about like what's the future roadmap of custodial solutions.
Maybe you go first this time. Maybe change the order this time. Not always start from me.
Quick last comments, remarks to the audience.
I go. Last comments to the audience. Yeah, I think when it goes back to thinking and picking the solution and your provider when starting transacting in the digital asset space, first build a risk assessment. When you have your risk assessment, know exactly what your use case and pick the solution that enable you to be actually scalable with your use case. We've seen too many players that went for the easy solution first and the quick way in crypto, and then had to rebuild everything because this was not production ready for their specific constraints. So it's actually a very important piece of your digital asset stack, and this is pretty much going to be the tech custody and your custodian is going to be actually a partner that will enable you to increase your business or completely be a blocker. So I think it's super important to take a step back and really spend some time in doing the due diligence. For instance, something that you may not know is that in our industry, no one actually has been ISO certified for business continuity, which is something that almost doesn't make sense. So my take always when I look at tech custody solution and when we were thinking about how to deploy our roadmap, right, on our space, it's to make sure that we don't reinvent the wheel. There are frameworks that work in Web 2. There are frameworks that work with financial institutions, and we need to adapt to them.
I'll be quick and conscious of time. I see the clock ticking, but just more than speaking more about custody, an invite to institutional players when they have to get into the space, into physical digital assets, just go to the backbone of the regulated infrastructure, which is the regulated custodian. And this country on top is set for a unique opportunity. We have regulatory framework on financial institutions and regulatory framework on VASPs. So financial institutions here have the unique opportunity to access to digital assets in their physical form, and also to stable coins, which is something that we have not spoke about, of course. But there is a specific framework pushed by the central bank here. So I believe this country is going to become certainly a hub for stable coins, which is something very interesting and has connections to the DeFi space and many other projects. Everything from me.
Thank you.
Yeah, sure. And to me, I believe 2025 will be a very important year for both the crypto world and the non-crypto world, because as Bitcoin become more and more appreciated by the non-crypto world, we will see a trend where non-crypto world and crypto world will become more united and emerge together. So custodies will be the first line of defense for people who enter the crypto world. So custodies will play a critical role of the success of the crypto industry in 2025.
Well, I really loved your last comment, the last line of defense for it will self-defense. Well, thank you everyone for participating in this panel, and thank you everyone for listening to us. Please give a big round of applause for our panelists, and please enjoy the rest of the day.
Thank you.